Silver premiums have been dead on arrival for a while now. The markets, the physical markets, have calmed, and still, despite that, prices hover near all-time highs in gold and above 30 in silver. So imagine what happens to the price when physical demand comes back into the picture. So it looks like we have a little bit of a rally since around June 27th. I would be a little cautious of it, though we could get whipsawed here because it looks like open interest has gone too high, too fast in the gold market, which is reflected, of course, in the silver market. It doesn't necessarily mean that this rally won't be sustained, but it does mean to stay cautious here and not to buy fully emotionally into this rally since June 27th. We could see a few more drops from here in the short term. Silver keeps hitting new highs relative to platinum, and yes, platinum is also at all-time lows relative to gold. So both gold and silver are at record highs in platinum terms, which means if you've always wanted some platinum and you've always wanted it as part of your stacks, now is a good time to get a little bit.
In today's news recap, silver prices hit 3-week high on optimism over Fed rate cut, up 6% in July. Silver prices extended their winning streak for the 8th consecutive trading session today to hit a 3-week high of 92,550 per kilo on the MCX as softer than expected U.S. economic data reinforced expectations for Federal Reserve interest rate cuts. Prices have rallied 6% in July so far, on track for the biggest weekly gain since mid-May. Markets are anticipating a rate cut from the Fed in September due to waning inflation, a slump in the U.S. job market, and a cooling economy. Traders are currently pricing in a 73% chance of a Fed rate cut in September, according to the CME FedWatch tool. In periods of falling interest rates, gold prices typically ascend as investors find bullion more attractive compared to income-paying assets such as bonds. The U.S. PCE index showed that inflation in May slowed to its lowest annual rate in over 3 years. Core PCE prices increased by only 0.1% from the previous month, the smallest increase in 6 months, while the annual rate eased to 2.6%, the lowest since early 2021. Additionally, U.S. job openings rose to 8.14 million in May, and first-time applications for U.S. unemployment benefits increased last week, with the number of people on jobless rolls rising to a new high by the end of June. Now we'll show you more clips, but remember to like and subscribe if you like our recaps.
Open interest that I got from Gold Charts R Us, as usual, and it's a little bit doctored. I doctored it because I wanted to bring it to update with the CME website. This chart is usually on a 1-day lag, and I wanted to show you today's open interest numbers, and today is Thursday as I'm recording this. It is right now, it says here, 516,324 contracts, but the actual number is 529,950, if I remember correctly. So I put in the candlestick over here a little bit taller by adding in this color, and I did it all in paint. I am an amazing modern artist, and you can ask me for paint tips in the comments below. I'll be glad to answer any questions. So anyway, we have this open interest chart. You can see here that open interest has really climbed since the June 27th bottom in gold. And of course, silver follows gold here. I'm using the gold chart as a proxy. So June 27th, we had a low of about $2,300. And now we're at close to 2,400, I think 2,380 last time I looked, or wherever it is now when you're watching this, I don't know. So we had a low here of about 440,000 contracts on that low in the gold market, and now we're at 530,000. So that's 90,000 contracts. Not much of a price move, but a big move in open interest. That's making me a little bit nervous. This open interest is making me nervous.
These pretzels.
Nervous. It's more that I'm just being cautious here. I don't quite trust this rally in dollar terms, at least. I'll show you the rally in commodity terms, which is much more promising. I still think there could be some whipsawing action in the days, maybe a week or two ahead. Just stay cautious here and expect it and play nice, basically. So that doesn't mean that this is a fake rally. It could be real, but because you look here, in March, and we did have a major rally in price here and a huge rally in open interest. And then what we really want to see is this, though, right? This is price moving up from about 21.50, it looks like, to a high of 24.50. So we had about a $300 move here, and open interest didn't really do much at all. That keeps the bullish fuel alive, as long as you don't keep rising and rising in open interest. You saw, remember when open interest hit an all-time record of 850,000 contracts. That was in the eve of the March smash, which took a lot of people out of the game, unfortunately. So for that reason, just stay cautious here. If you're trading, especially if you're stacking, it doesn't really matter that much because premiums are very low right now. And you can still get a pretty good deal on physical. Call Miles Franklin and mention Arcadia Economics, of course. I don't remember if I talked about this previously 2 or 3 weeks ago, but silver is at an all-time high relative to platinum. This is actually the platinum to silver ratio, how many ounces of silver it takes to buy 1 ounce of platinum. Now, I don't recommend stacking platinum. I never did. But if you've always wanted some platinum just to diversify, just to have it because it is a really cool metal to own, now would be the time to exchange some silver if you have any extra or too much in your safe, or it's too heavy or whatever, you want to free up some room. Then you can take some of your silver and buy some platinum at a very good deal right now. It's about 32 ounces. See here the ratio is 32.07. That's what it is today as well. So it takes 32 ounces of silver to buy 1 ounce of platinum, and we've only gone below that one time in history, and that was in 1980 when we were about 18, close to 15 to 1. And there was that 15 to 1 ratio again in Endgame. I guess it also goes that way in platinum as well. But yeah, you're not going to get much better prices than this, I don't think, in terms of platinum for silver if you want to do some trading. Or maybe Miles Franklin will take your silver and give you some platinum. Could be. Ask Chris. Maybe he knows. He would know. It's his channel. Gold at all-time high versus platinum. One more thing about platinum, you can see that if you want to trade some of your gold, I am not trading gold for platinum. I don't have that much gold and I want to keep it. But if you have a little bit more than you want and you want some platinum instead, it's a good time to trade some gold for platinum if that's what you want. Silver premiums are dead on arrival. We're at 7.96% premium on junk silver relative to the spot price. This is almost prior to silver squeeze. Silver squeeze is right here where I am circling at the beginning of 2021. There was this big jump on silver squeeze, and then we moved up from there to about 50% right before 2023, about October, November 2022. We've been going down ever since. Demand is kind of soft right now, and I see that on my channel as well. So this is going to wake up pretty soon. I think after the next banking crisis, it's going to wake up very powerfully, and we'll see what happens then. But if you want to get a good deal on physical silver or physical gold right now, now's the time to buy because premiums are very, very low.
In today's news recap, gold and silver's high price recession. So China didn't buy any gold for its central bank reserves for the second month running in June, writes Adrian Ash at Bullion Vault. Chinese consumers have meanwhile vanished from the country's jewelry stores, and Indian households have also quit buying. Silver-backed ETF investment funds have grown less than 5% in size from last month's four-year low, while gold ETFs ended June at their smallest mid-year size since 2019. After making out like bandits in 2021-22, retail gold investment dealers and mints are really struggling as high prices combine with high interest rates to crush Western demand for coins and small bars. The world's bullion markets this spring set new all-time gold price highs day after day and came within 1 cent of $2,450, while silver topped $32.50 for the first time since 2012, adding almost 45% in U.S. dollar terms inside 11 weeks of silver trading. Yes, that surge has burnt itself out. But silver ended last week with its highest Friday finish in London since the 11-year high it set in late May, down only 2.2% from that Friday's weekend peak. Gold, meanwhile, recorded its fifth highest ever Friday for U.S. and Euro investors. Even the British pound's clear relief at Labour winning a landslide UK election victory over the Conservatives still gave gold its sixth best weekend in history against sterling. Now we'll show you more clips of the latest interview, but first, smash the subscribe button, turn on notifications so you do not miss out our daily recaps.
Silver versus commodities continuing a healthy bull market. So we talked about how I don't trust the dollar rally so much, or the current one since June 27th, very minor short-term rally here. But what I am seeing on silver versus commodities is that we have broken decisively through the 200-week moving average. We broke through it once here. and we settled back down to test again, and now we've broken through it again. So it looks like we're decisively above the 200-week moving average. This is a very rare signal. As goes silver bull markets relative to other commodities, it means that the value of silver is rising relative to other commodities because its moneyness is starting to wake up again. And the logical way that works is that other commodities do not have monetary demand. Silver has monetary demand, and everyone needs money. Therefore, everyone needs silver as the moneyness of silver is recognized. So this bull market should continue higher and higher as the moneyness of silver becomes recognized as the dollar fails, because as the dollar fails, people with currency are going to realize that they have nothing and they're going to need money, and there is no spontaneous agreement on money. It has to go back to the past, and the past is gold and silver is the public and gold is the banks. That's how it is. That is monetary reality, and there's no arguing it, really. I mean, you could, it just doesn't make any sense. So anyway, we had the break of the 200-week moving average in 2008, which led to a huge rally up to the $50 top. This top relative to commodities was not as high, but this was the $50 top around here in May 2011. We had another break of the 200-week moving average around here in 2015 at the end of the gold bear market. That signaled the end of the bear market, that break of the 200-week moving average. Another break of the 200-week moving average relative to other commodities right here prior to the all-time record high of silver relative to other commodities at about 0.22, 0.23 or something like that. And we have another break over here. This is the fourth break since the 2008 financial crisis. These are very rare signals. Pay attention to it now, because even though we might be whipsawing relative to dollars, I think we are on the next leg up relative to other commodities in silver. This is an interesting story, and I wanted to transpose it on something that might be happening in the currency markets. I don't have any direct evidence of this, but I don't see why it wouldn't be happening, especially if the Bank of Japan would be panicking. So we have, this is from Bloomberg. The title is Saudis Warned G7 Over Russia Seizures with Debt Sale Threat. The Saudis did not want Europe to seize Russian assets from its central bank, anything that was stored in other European central banks, like the European Central Bank. Touche. And so apparently this made the mainstream media. Read the first paragraph here. Saudi Arabia privately hinted earlier this year that it might sell some European debt holdings if the group of seven decided to seize almost $200 billion of Russia's frozen assets. People familiar with the matter said. So Saudi Arabia is playing both sides here. It's on the U.S.'s side and it's on Russia's side. And let's see what move they make when the U.S. Eventually falls monetarily. It's going to be an interesting story in Saudi Arabia. And why doesn't this guy, Zelensky is his name, why doesn't he ever wear anything respectable? He looks like a bum, or like a street bum with the cargo pants, and I don't know what the hell kind of shirt he's wearing. He always looks like an idiot, in my opinion. This guy's much better dressed. That's a nice keffiyeh there. Look at that. But anyway, it says at the bottom here, the Saudis specifically mentioned debt issued by the French Treasury. They threatened the French to sell their debt. Wow. So my point here, amount of dollars. We have here unemployment numbers. By unemployment numbers, the final recession should be due at any time. I put here the unemployment rate. So we have here, I highlighted here each time the unemployment rate bottomed prior to a recession. We have here March 1989 at 5%. 16 months later, we had the first gray area here. That is the 1990 recession. April 2000, unemployment rate bottomed at 3.8%. 11 months later, 2001 recession, and that accompanied with it the dot-com bubble burst, et cetera, et cetera. May 2007, that was the low in the unemployment rate prior to the 2008 great financial crisis. 7 months later, 16 months, 11 months, 7 months. I'm discounting this because it was lockdown induced, and people tell me that I shouldn't discount it, but I am, because this was a special case here. This was artificially induced unemployment. So we have here April 2023, a bottom in the unemployment rate at 3.4%. And now we are at 4.1%. The trend is clearly up now. It's been 14 months since the unemployment rate bottomed. The longest we have here is 16 months, so it could be 2, 3, 4 months out ahead. It's measured in months is the point here. The next recession has to be months away. I don't know how many months.
What do you think of Rafi's take? Are you interested at all in the yen trade, or would you rather just enjoy this dip to accumulate more gold and silver? Share in the comments section how you're navigating this environment, and feel free to share your journey with the community. What's your price target for gold and silver in 2024? Is Rafi totally wrong in his banking prediction? Will Trump be the next president of the United States? Let's discuss, because we want to know. Now watch this video right here because it's a perfect fit for you. I see you on the other side.